Hey folks, we're recording at Chainlink SmartCon event, and joining me is Ophelia Snyder, who is the co-founder of 21Shares. Ophelia, great to have you.
Thank you so much for having me.
Ophelia, tell us a bit about yourself and 21Shares.
So I started 21Shares with one of my best friends almost 8 years ago. It's actually going to be 8 years in early November.
Wow.
And we started the business mostly to help out our moms. My mom introduced me to crypto in 2013.
No way.
Yes, I have the wonderful claim of being orange-pilled by my mother, not the other way around. And she completely understood everything about the space.
Wow.
She got it immediately.
I got to meet your mom.
She's amazing. But she got it. She was like, you know, we're in a geopolitical anomaly. SWIFT is not going to last. Merck spends too much money hedging, but global trade is here to stay.
Wow.
We need a global reserve currency. Have you heard of a thing called Bitcoin? I'm like, excuse me? No. What are you talking about? But at the time, there was no way for her to invest in the product.
Sure.
She didn't feel comfortable managing keys, and so she never did. And then a few years went by, and this problem still existed, and my co-founder had a similar issue with his mother, who was Egyptian and trying to make investments of her own, and we decided we were going to solve this problem for them. And so we set out to build 21Shares, which has become one of the largest global issuers of crypto ETFs. We make up north of 30% of market share in Europe, manage about $12 billion in AUM globally across the US, Europe, UK, Switzerland, the Middle East, Australia, and Brazil. So we have one of the largest footprints in the space. And we've been building ever since.
So that's incredible that you're in so many markets. And we know the United States was lagging behind a lot of the other markets. So what's it like to finally have ETFs in the United States that you were able to launch?
So one of the interesting things that's been happening over the last couple of years is you're starting to see the U.S. market catch up. And most recently, you even saw this with the universal listing standards that are coming out that are allowing more ETFs to launch. And what I'm hoping is that soon we'll be able to offer our clients in the US the same product suite we do in Europe, where we have 40 plus products covering all sorts of different assets, actually, including Chainlink.
So let's talk a bit or double click into the SEC's recent update to the generic listing standards. So from your perspective as a issuer, does that make your life easier? Does it make the process faster?
So yes, it's part of a broader trend, though, of regulatory normalization, where the relationship between digital asset firms and their regulators, essentially in every market, is getting to a much more normal place. What I mean by normal is a clarity, transparency, a clear understanding of what it is, how you're supposed to do things, as opposed to constantly needing to adjust for, you know, an exception or a one-off. And actually, it brings the market much closer, the American market much closer to what we had in Switzerland quite some time ago, with a similar set of constructed rules. But it's really just one piece of this broader puzzle where we're seeing it with many different pieces of legislation, both in the US and abroad, pushing towards a place where people can now really understand how crypto is going to be regulated and therefore build their businesses accordingly, which is ultimately better for everybody.
Absolutely. So with these new guidance and clarity, if you want to use that word, because it's the bill that's coming up, of course, are you envisioning that a lot of the TradFi ETF products that exist outside of crypto will now be created for crypto assets?
So I think you will start to see more product and more creative product. And that's actually part of the foundation of our merger with FalconX, is this bringing together of a one-stop shop that can really offer more interesting, more creative, more groundbreaking products to our customers. And 21Shares as a firm has actually launched about 60 products that were global firsts in their categories, whether in different geographies or different underlying assets. And we're expecting to continue to do that. And the partnership with FalconX really allows us to accelerate that process, as does this regulatory backdrop that we're operating against.
Oh, for sure. Are you blown away by the success of the crypto ETFs? I mean, just launched, within the past year or so, and we're seeing amazing success across the board.
It's been amazing. It's been a long time coming, but it's been amazing. And I think it will continue to be because there are more people like my mom.
Yeah.
My mom is actually exactly who you want. You want somebody who understands our philosophy as a space, understands the use case, wants to participate. Right. How do you make it possible for that person to participate? How do you make them comfortable participating?
Absolutely.
And the answer is simplifying the infrastructure, which means ETFs are going to continue to be a major on-ramp for people who are just interested in exploring the space. Yeah.
And then what are your thoughts on the Trump administration opening up investments in 401ks to different assets, which includes crypto? And excuse my lack of knowledge around this, but is that very beneficial for ETFs and things like that?
It all comes back to the same thing, which is infrastructure. And at the end of the day, 21Shares and FalconX in a lot of ways are infrastructure first companies. We're seeing a moment in time where we can really streamline how people get access to investment products.
Right.
And when you think about a 401k, at the end of the day, it's just another wrapper.
Sure.
And people who have those wrappers and want to invest in them are not going to be managing their own keys, their own coins. That's not the structure. And the asset managers that offer those products may not want to do that themselves either. So I think you're going to continue to see adoption of ETFs because what it does is it shifts who has to actually run the infrastructure to facilitate the investment.
Sure.
From either the individual or the wealth manager to a specialized player who really knows how to deliver that value. And that typically helps foster and speed up adoption of these products.
Oh, for sure. I mean, the ETFs have been a success. And to your point, even my own parents who are interested in crypto, ETFs are an easy wrapper that they're familiar with, a process versus going on Coinbase.
Exactly. Exactly. Yeah. It's a tough ask for somebody to open what they perceive of to be really a new bank account just to make one investment. That's a tough ask for people.
For sure. And are you working with or in the process of educating RIAs and wealth managers about your ETF products, and are they receptive now?
Yeah, so we've been doing that for years. And 21Shares as a business has always led with clarity, transparency, and education. We both want to make it possible for people to buy the products. We also want to make them comfortable in buying the products. And those are actually two different things. And we've been on this road of educating different investor bases around how they can allocate to the space for a long time. What we've seen is there's a spectrum to institutionalization. And I think people often miss that, which is you can have either, an individual, which I think most people understand. You can have a brokerage who's going to allow that individual to execute. You can have an investment advisor who, if their client asks them, will let them buy the product. That's mostly where people are at today.
Yeah.
The idea that investment advisor is going to give you advice on a crypto allocation, for the most part, hasn't really even begun. Let alone what would be considered much more institutionalized players, thinking about like insurance or pension plans or government funds or endowments. That's really the upper end of what institutionalization looks like. And we're in the very, very early innings of what that will be, which is why the success of the ETFs to date is so interesting.
Yeah. Are there plans to look? There's a lot of crypto assets out there, right? And we're still waiting on the market structure bill to pass. But are there plans to expand the portfolio of ETFs around different altcoins? It may be too early to answer that, but I'm curious, how you guys are planning as more clarity comes.
So I think if you look at our product suite in Europe, that will give you a lot of the answers. We offer 40 different underlying assets. We have index products, and we've been running a lot of these for years. Actually, the first product we ever brought to market all the way back in 2018 was a index product. It wasn't a Bitcoin ETF. It was actually a crypto index. We didn't bring a Bitcoin ETF to market until a bit after that. And I think we're hoping that the same thing will be able to occur in the US market, that we will be able to really see clients have the same level of access they do in Europe. And that's my expectation for where the market is going.
It's exciting to see all the building and innovation, and you guys are ahead of the curve in many ways, building that index product, because that is, the majority of investors, they don't have time to pick stocks or stuff, but they can invest in an index.
Yes.
Yeah.
And I think we've seen that in every other asset class, that is what investors like. And I think you're going to continue to see that here, which is we will there's some people who love picking stocks and will always want to pick their own stocks, and that's wonderful. But there are a lot of people who don't. And I think you will see increasing popularity in some of those types of products over the next several years as interest moves from being a very Bitcoin heavy story to being a broader story.
Talk to us a bit about staking, because that's been a recent addition to certain ETFs with the SEC. It's still some approval still needed and so forth. But are you guys working on anything like that?
So we've offered staking ETFs since 2019.
Wow.
So we've been doing this for a long time. We brought the first staking ETFs to market in Europe. We were some of the first big institutional clients for staking products with our providers. And so I'm really excited to see that expanding and continuing to see market normalization. That just because you're in one jurisdiction versus another, you can access a similar type of product. And I think that is very much the theme for crypto markets right now. We are normalizing our relationship with regulators. We are normalizing our relationship with asset allocators, and we are becoming part of this global ecosystem as an industry. And it's a really interesting time. And it's actually that timing that made the merger with FalconX so interesting.
Oh, absolutely. It may be too early to answer this question, but there's a race to tokenize different assets, equities, money market funds, gold, precious metals, real estate, and much more. Do you think those assets might find their way into ETFs eventually?
So I think you need to look at it as a wrapper.
Okay.
Right? ETFs are just a wrapper. You can think of them like an empty box. You can put anything you want in the box and trade it. That's actually how ETFs work. And you can think about it imagine a gift box that you can buy. And you can put anything in it.
Right.
You can put a PlayStation in it. You can put anything you want. And ETFs work exactly the same way. You can put anything inside that wrapper you would like to.
Right.
Tokens are just a different type of wrapper. So imagine an ETF is a blue box and a token is a red box. You could theoretically put a red box in a blue box, but I don't know why you would it depends on what the use case is. Why do you want to do that?
Right.
Obviously for things like investable crypto assets. So, Bitcoin, Solana, Ethereum, people are looking for that exposure. And so the wrapper provides that functionality. When you think about tokenization, the question is you're providing access to that product in a different way for a different audience. And I think that is something we will continue to see. Both from a distribution perspective, but also from a settlements infrastructure perspective. Tokens are just much, much, much more efficient as financial instruments from a clearing perspective. And so I think you will start to see more and more TradFi assets on chain, including ETFs being put into tokenized formats. And my perspective is I'm actually not even sure the end users will know.
They will know.
Not necessarily, because this is back-end infrastructure for brokerages. And I think that is very much the direction of travel, and that's what I mean when I say TradFi on crypto rails. Yeah,
that definitely makes sense. And it's amazing, Ophelia, the amount of TradFi institutions that are entering the crypto market, all the big banks, the big Wall Street firms. What do you think about how they've all started jumping into this race, and they're all trying to tokenize, launch stablecoins, trading, ETFs, custody, and all that?
It goes to show you that we're at that inflection point where this now makes sense, and the technology is mature enough to actually support those types of use cases. In the very early days of building the company, we went and tried to pitch some very large allocators, and they told me things like, if I can't put 500 million to work, without moving the market, I'm not going to do this. This doesn't make sense for me. I need to write bigger checks than that. And these were large, large pension funds, or even
endowments and things.
Exactly, governments and things like that. So one of the issues that I see is that we're finally at a scale where these technologies can actually be used in that way. And it goes to this idea that we will have a world where it is easier to transfer value in the format of a token than it is in the format of an otherwise created security. And that has much more to do with infrastructure than anything else. And so when you see all of these large financial institutions building out that infrastructure, whether it's custody services, staking services, trading services, investment solutions, it's just part of the trend moving us towards what ultimately was the vision for crypto, which is we want to run the world's financial rails.
It's funny. It seems like blockchain rails are going to be powering all the markets eventually, the economy, and certain parts of the government.
Yes.
So it's exciting to see the innovation that's happening. we touched on it a bit earlier, but the market structure bill is coming up. Everybody's waiting for that because it's going to give clarity on what you can do, can't do, and what the regulators need to do. Do you think we see that pass by Q1 2026, and what impact do you think it'll have on the market?
Oh,
hard question, I know.
So look, I think timing is always tricky, especially with like the way the U.S. government's been functioning. I think the timing of knowing when bills are going to be passed, I couldn't tell you, but sure. I think what's really interesting is that you are seeing this trend not just here, but globally. This isn't an America story. This bringing of clarity is not an America-centric issue. You're seeing it in many jurisdictions. In fact, in most major jurisdictions, you're seeing this real push towards having regulatory clarity, knowing who's in charge of regulating these assets, defining them in some way. And the way I typically conceive of regulation is sort of like a layer cake. The bottom layer is how do you define what you're regulating? Who's in charge of it?
Sure.
The second is what are the rules of the road? And then the last is figuring out how that's going to fit with every other piece of financial regulation out there. And so, for example, if we're going to create crypto's new asset class, that's amazing. What does that mean for equities? What does that mean for fixed income? How is it going to change the definition of these other things? And I think what we're seeing is that first layer, who's in charge? How do we define this? Who's in charge? Has finally started to really take shape on a global basis. And we're starting to see what those rules of the road are going to be so that we can eventually get to a place where crypto is just another part of the existing financial system as opposed to this super special thing on the side, which is actually not to anybody's benefit.
Yeah, well said. And even the coordination of the world governments on how they can at least have some synergy in how they view this asset class.
And that requires harmonization.
Yeah.
That's actually the European word for it is you have to harmonize regulations across the Eurozone. But given the way crypto markets work, you will need to actually harmonize a lot of this legislation on a more global basis to make sure that it works together in some way. And I think that's what we're seeing is as that clarity is coming through, as we're starting to see global standards for how you can do these things emerge, we will start to have a much clearer way to build sustainable, real businesses in this sector, which is ultimately what we need to have staying power through market cycles. Oh,
absolutely. Final question before I let you go. What's on your roadmap that you can share?
So, obviously we just announced the acquisition by FalconX. So one of the things that we're really excited about is how these two firms together are going to build a one-stop shop in crypto, strengthen derivatives, strengthen trading, strengthen regulated product, and how we're going to be able to use that as a cornerstone for bringing more creative, more innovative products to market, stay on that bleeding edge while doing things faster, better, and more cheaply than TradFi players and then other players in the market. So I think really that's what you can expect from us.
Well, I'm looking forward to the updates. We'll keep an eye on 21Shares. Thank you so much for joining me, Ophelia.
Thank you for having me.
This episode is brought to you by Propy, which is leading the charge in putting real estate on chain. Propy is a game changer. You can buy and sell real estate with cryptocurrencies using the Propy platform, which is powered by a blockchain, of course, and they have a native token called Pro. And I've been an investor in the Propy token since 2018. So Propy is a licensed Web3 pioneer operating since 2017. They have facilitated over $4 billion in transactions. They're putting titles and deeds on chain. They use Coinbase for their crypto escrow service. So this is a great platform. And once again, they are ahead of the curve when it comes to putting real estate on chain. And they just launched a great campaign where you can earn some of the Propy tokens. And it's simply by doing tasks such as sharing their vision video, signing up and inviting a friend, and much more. So if you'd like to learn more about Propy, visit the link in the description.